Hello traders, this is Forensic Forex with Deontay. In this video, I will cover sell ideas utilizing the Asian range. Simple approach to selling.
Leave the indicators alone.
A seller in trading refers to an entity or individuals that sell financial instruments, commodities, or assets with the intention of holding them for appreciation for profits as the price decreases. In this video, I will cover how I approach selling with two simple methods. Stay tuned. Methodology. The Asian session typically exhibits a characteristic pattern of consolidation. During this time, market orders are accumulating, which build market sentiment. Scenario 1, which is the ideal scenario, sell when price runs above the Asian session high. You're looking for a reversal condition. Scenario 2, which is not the ideal scenario, but if you're a seller, this is one of the two. You can sell when price runs below the Asian session low. You're looking for a breakout continuation. Let's take a look at scenario 1 together. We said scenario 1 is sell when price runs above the Asian session high. You're looking for that reversal pattern. We can see in this depiction, we have the Asian session high, the Asian session low, which makes market sentiment, that range. So typically, the Asian session is going to accumulate orders, and that's going to build in market sentiment, which creates speculation going into IPTA True Day at midnight. That following day, traders are speculating based on that sentiment that's building up, whether or not this next day is going to have a move to the upside or the downside. Now, since this video is about simple sell scenarios or sell techniques, that means we've already arrived to the conclusion going into this day that we're a seller. So this is that scenario we're looking for. We're looking for price to run that Asian session high to lure traders to the wrong side. The breakout traders are going to look to go long, while we're going to be counter to them and we're going to look to go short, going towards that sell side liquidity pool that's still available after rating that buy side liquidity pool above the Asian session high. Let's take a look at some pairs and some examples. Let's say we went into this day, we're looking at the pair US dollar versus the Swiss franc, and it is now Wednesday the 13th, November 2024. And going into this day, we wanted to be a seller, right? We arrived to our conclusion. We did our fundamental, we did our analysis, a higher time frame premise, day a week profile, weekly profile, etc. And we arrived that we wanted to be a seller. And we saw this idea, right? We have this Asian range, and price has buy side and sell side below it. The Asian session high, Asian session low. Once price breaks that Asian session high, that's where we're looking to go short. So right on this candle here, we could look to go short. Again, if you want to take it a step further, you could wait for that kill zone to find the London session model to go short. However, again, this video is just a simple way to find shorts. Definitely for traders that don't have a lot of time to sit here and be a day trader. You might have a job, you might have dependents, you might have kids, you have a spouse, etc. So what you would do is you'll wait till midnight, you'll sell, right? You'll put a sell stop order, right? Price is going up. You're selling on strength, which is the ideal condition because you're selling in a premium. So your sell stop would be here. Or if you had time to watch this live, you would simply go short anywhere at the Asian high or a little above it. You're then going to look for a 1-to-1 scenario or a 2-to-1 or a 3-to-1. I personally look for a 1-to-1 scenario. It could be 15 pips for 15 pips. It could be 20 for 20. It could be 30 for 30. If you're going to be using the break, selling off of the break, I would recommend using a larger stop loss. So anywhere for 20 pips to 30 pips. So let's go 20. All right, and this is you Swissy. So we can see what buy side has been rated. So this has been liquidated. Now our target now becomes sell side. Now we don't know objectively, well, at least subjectively, right? We don't know for sure if it's going to get down to the Asian low, but the idea is that we want to go short to this breakout. The ideal scenario is the reversal pattern, selling higher. As price is going up, we want to go short. Play this forward, see what happens. You see London even pulls us up a little further. Again, we know that we would be in drawdown. That is inevitable. That's the whole reason why we use a stop loss in the first place, because we know that there's going to be a basket of risks or some type of drawdown or room that we will allow the market to go against us without feeling uncomfortable. So that's our risk. Whether you're risking 1%, 2%, 3%, whatever that is per your risk parameter, you take that and you risk safely according to your equity. Now I'm looking to see if price is going to go back down here to sell side. That's the main goal. We're trying to get back down to sell side or get into some type of profit, right? We want to come out as a winner. We're selling for the day. We're a seller. And as you can see, going into that news event too, during the New York session, price comes down and hits out that Asian session low. So we went from one side of the market and went back to the other side. Now, most people would see this and look and think, oh, this is your classic ICT accumulation, manipulation, distribution. Absolutely. But at the end here, that New York distribution quickly turns around after that news, right? News gets people to go short, and then it reverses and pushes price back against those people that are chasing the news event. But that's for another video. But again, we're selling after breaking that Asian high, or we're selling at that Asian high. We're selling in a premium territory above 12 a.m.'s opening price and somewhere at or above the Asian high. So that's scenario one. Let's take a look at other examples. All right, so we're looking at GU. This is October 22nd, Tuesday. So we have the Asian low, we have the Asian high. So we know that there's buy side and sell side liquidity pools above the high or the low. So we got this one here, and we got this one here. We have midnight opening price. So going into this day, we are speculating. Again, this is if you're a seller, right? How you would approach this. We're going into this day thinking that we're a seller. We want to be a seller. We think price is going to give some type of distribution lower, and we want to be able to get that sell opportunity. And how could we get that sell opportunity? We're going to get that sell opportunity clearly above 12 a.m.'s opening price because it's a premium. That's where we want, right? We want that ideal condition. We want to sell here. We don't want to sell below because below is what? Discount. That's not ideal. It could work out and still give us profit, but it's not the ideal scenario. But if we're following the market flow and the sequence, what side breaks first? If it offers us higher price action to sell, we're going to take that. So let's play it forward. Play it forward. And that's where your sell stop order would be triggered, right? If you placed it in and you're banking on selling on that Asian high or just above the Asian high, you would go short there. I have an order sitting around that area. Going for a one-to-one scenario. This is GU. Let's say we're going for 20 for 20 and send it for 15 for 15, like I do normally for my intraday scalps. Looking at a 20 to 20, we'll even measure that so you guys can see that, right? 20 pips to the upside right there. And then 20 pips to the downside. Same thing, right? There you go. So one-to-one scenario, we want to see if price could possibly get back down towards the Asian low because that's where we make our profit or get close to our TP. And in general, we're just selling. We want price to go down after taking that short. So now that price has liquidated that buy side, traders could inevitably be long, right? Traders for this day that might be a buyer, they're probably going long on the breakout. Again, not all these scenarios will 100% come to fruition. Sometimes they will fail. You'll go in short and price may still continue to trend higher. And then maybe it drops down lower, right? These are a lot of scenarios that could happen. And then you're all upset about the market. The only thing you can control is your risk. That's it. Go back the next day or following day and try to get that back, mitigate the losses, and move forward from there. Do not get caught up on the losses. Do not get caught up on the wins. There are always other opportunities, ample of opportunities to make some type of profit in this market. There's always moves happening, but you don't have to be in every single one. So I'm looking to go short here, get that retracement back down or reversal back down. So play it forward, and you can see happens very quickly during the London session. Price wastes no time. 2 a.m. happens and it drops straight down. So we went from one side to the other side. We targeted that sell side objective. So let's take a look at one more example. We'll play it out through the rest of the day too, just to show what happens. Because sometimes you get more than what you're asking for again too, right? Sometimes you get more. Now, if you didn't get a final TP closeout or you took partials, you're able to have a trailing stop loss, right? Or break even, you can hold. And these trade ideas can continue trending on. The whole point is simple sell above the Asian high. That's it. Selling in a premium. Let's find one more example. All right, for this example, we're looking at UCAD. This is October 15th, right? Go into October 16th, right? So this Asian session, that Tuesday night, we have Market sentiment building up. Now, sometimes it might not be a clear consolidation. I know this might be a question some people may have. It is preferred to see the Asian session consolidate and have a small range cycle because it's inevitable to catch that large range cycle after the market is consolidating and comprising orders really tight in a range. Anytime you get a small range, more than likely in the near future, you're going to get that large dynamic move, and that's what we want to catch. So there are times where the Asian session is lengthy, right? It is moving. There's a lot of expansion and movement in the Asian session, but it can still perform that idea. Just keep that in mind. Go with what you're comfortable with. Remember that. We have the opening price here. Got our buy side, we got our sell side, and let's play it forward. So let's say we're going into this new trading day, going into the 16th, right? This is Tuesday the 15th. This is going into Wednesday the 16th. If the true day open 12 a.m., we got our new premium and discount levels by the algorithm. No indicators. We know where the premium level is. Anything above this price point here, the opening bid. Let's play it forward, and we would have that order sitting right up here, right? This entire time, we'll have that order sitting right up here. If this is the scenario that you're looking for, you'll place that sell stop waiting there. Set that parameter up. You don't have to be here watching it live unless you want to, but you can set it up, set it and forget it, and come back another day. That's 15 for 15. Like I said, if you're going to use this idea, I would use a larger stop because you don't know how far that protractionary state could be. That false move, that Judas swing could pull us up a little higher than normal. So let's just account for that. Press play. London tags that. Now we would be short, and you can see New York session gives that distribution lower, right back down to that Asian session low. So we reverted back down to sell side after taking out that buy side. So it happens sometimes very quickly, or sometimes it takes a little while for the day to get going and progress. The methodology, though, still stands. It's what you are going into the day thinking and which scenario can you use to possibly get into the market in the simplest way. And this is one of the ways I like to go short. Let's take a look at scenario two. Like we said, it's sell when price runs below the Asian session low. We're looking for that continuation idea, looking for a break, retest, and sell off. So as you can see in the depiction, we have that buy side liquidity pool. We're taking this stance that I don't want price to return back to the Asian session high. Because the low is rated and I'm a seller, I want to continue within that momentum or that break in that direction. So I'm looking for a break on that Asian session low, taking out that sell side liquidity pool, and continuing towards sell side. So it's going to aim for a lower objective while at the same time keeping that Asian session high intact and allowing traders to get that sell on that breakout. Let's take a look at some examples. We're looking at gold versus US dollar, right? That Asian session Wednesday night on the 2nd in October, going into Thursday, new day. We're looking to go short. That first scenario, we were talking about going short in a premium, in a deep premium, right? Above the Asian session high, at least in this example. However, there are times where price does not get back up to the Asian high and gives us that deep premium. There's times where the market will continue to distribute after breaking the Asian low, leaving the Asian session high protected. So in the sequence, going to the day, if we see price comes down and takes out that Asian session low, we would get in short. And I believe it's a sell stop. I know I've been doing this for a while, I always flip things backwards. I would use a sell stop, right? Selling on a stop. And I'll have my stop loss either at the Asian session high or depending on a certain pip parameter. Since this is gold, we're going to go with a $15 move. That's what I prefer. And we'll go short on weakness. Now, this is not the ideal scenario, but we're taking the assumption that if price is going to break the Asian session low first, and we're already going into the day speculating lower price action, then this buy side liquidity pool will be protected while this was rated. All right, bang. But there is more to be targeted on the downside. Now, where that may be might be a little more subjective depending on the operator or trader. There we go. So we're looking for price to target something lower or continue to sell off for the rest of the day. So we're going short on that sell stop and replace it forward. You can see London sells off. Going into that New York session, going into that news, we're able to hit that target. Right? Only $15, a $15 move. Just to show you guys here, looking for that $15 move right around there. So price came down and swept what? Some type of sell side liquidity pool here. Right? There's a sell side liquidity pool below this swing low, and it ran it out. This might even be the previous daily low. Right? This is Wednesday's low. Thursday took out Wednesday's low going into this day. So that's some objective measurements or projections. Or like I said before, you can use the standard deviations. Right? This video is not about targets or TPs or stop losses, but still trying to give you guys a full spectrum or big picture idea here. Right? We got one standard deviation of the Asian session there acquired, and then about 1.5 standard deviations acquired, almost got to 2. So these are objective, not subjective levels that you can use if you're going short for an idea. Let's take a look at another setup like this for scenario 2. Let's say we're looking at UJ and going into this day here, this Friday, the 6th of September. Right, just looking at an example, we have the Asian session high, we have the Asian session low. Anything above the Asian session high is a buy side liquidity or buy stops. Anything below the Asian session low is sell side liquidity or sell stops. We have our midnight opening price here, and you'll see that there are times where price does not return to that Asian session high, but continues to sell off after breaking that Asian session low. So let's say that scenario, we were banking on that. We would look to go short on the retest or the break of that Asian low. We would look for a 1-to-1 scenario. I would go 20 pips or 30 pips for this idea. For this one, I would probably go 40, but 30 just for the video's sake here. So we're looking for a 30 for 30, right? And this is UJ. The units might be a little different, right? The pip measurement might be a little different. So if price gets down there, that breakout, we're going with that momentum. That's where we want to see price continue selling off to. Now, it's not guaranteed that you're going to get that acquired sell-off right off the bat. Sometimes it might break this and run back up and put you in deep drawdown and then sell off again, because that can happen. Remember, there are many other scenarios that can happen. I'm just trying to keep it as simple as possible for the community. You could go in and do your due diligence and do your homework and see how some days do differ a little bit. But the methodology is there, though. There's a lot of layers to it, but this is just a simplistic approach. So you would go short on a sell stop, selling on weakness, and you can see it quickly hits the TP going into London. If you play it out for the rest of the day, let's see if it goes any lower. Who knows? News comes around, spikes it back up, and then takes out the buy stops here. But for the earlier portion of this day, it was selling after midnight. And we're selling on that break off and that momentum going lower. And price happened to turn around that there. But all in all, we still was able to find some type of profitable idea or some type of area where we could take partials. So we got, again, one standard deviation is down of the Asian session. This is a tight consolidation, right? Objectively, we all could agree there. Tight consolidation, small range, a large range is soon going to occur. The large range happened to occur here in New York because of the news event. That's neither here or there. We got down to about 1.5 standard deviations off of that momentum breaking lower. So again, this idea is not the ideal one, but if you had to go into this day and you see that you could take the odds, take the calculated risk, you can go short on that breakout. Remember, not every trade idea is 100% guaranteed. I'm not telling you you're going to go in here, you're going to take a trade, and it's going to be guaranteed. That is not what I'm telling you here. Please risk properly. With that being said, let's sum up the video. Key takeaways. Sell in a premium if presented. That's your ideal scenario. If you're going to be a seller any given day, you're looking for that premium sell. Stick to what you prefer. You cannot win them all. I'm going to leave you guys off with a quote. Always seems impossible until it's done. Nelson Mandela. Peace. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.